Thank you. Forgot about that. Okay, cool. Yeah, that way you guys can go back and grab screenshots if you want to. There's some people that had other obligations that want to be able to view this. So welcome everybody, whether you are live today or watching this down the road. My name is Phyllis Sawyer. I work at Security Home Mortgage, and I've been doing mortgages for 30 years, 7 months, and a couple of minutes. So a really long time. And I have watched interest rates really closely that entire time. And I like to think I have somewhat of a grasp on it. But the bottom line is that nobody truly knows what interest rates are going to do, but we can predict based on a few things. I'd like to introduce Tyson Cook. So Tyson Cook is my loan partner. He and I have been working together almost 4 years. He's also my son-in-law. And so that's, kind of weird, but it's been awesome. It made my daughter and grandbabies move here from Colorado, so it served many, many purposes. But one of the reasons I hired Tyson, he was in the oil and gas industry, and he had a master's degree from the School of Mines in Colorado, which is a very, very prestigious university. So a master's degree in economics, right? So he understands a lot of the technical side of stuff, and he's done quite a bit of research to bring this presentation to you. I'm going to chime in on a few things. And then when Tyson's kind of done talking about the meat of this, then we're going to start talking and discussing ways that you can take that information and have conversations with your potential clients, your sellers, your buyers, your neighbors, about the market and about Utah's housing economy. So super excited for this. And Tyson, I'm going to turn it over to you.
Okay, perfect. All right, so we'll just jump into this real quick. Hang on. There we go. Okay. So here's a quick outline of what we're going to do. I'm going to try to keep it simple, but also give you some good information. So I tried to strike that balance between not getting too deep into the weeds where it's just overwhelming, but give you some good info. So we're going to talk about kind of generally what affects interest rates, not just mortgage interest rates, but a bit of general knowledge. And then what will rates do this year? What I think, what many industry experts think, because there's a lot of people way smarter than me on this, that literally it's their career to follow this kind of stuff. So I looked at a lot of their opinions. What will the housing market do? And then what does all this mean? And that's kind of the discussion that Bliss will lead. All right, so first off, if you've ever taken an economics class, you've probably seen this chart. So money actually behaves the same way as any other good or service. There's a supply for it, and there's a demand for it. And so we've got the quantity over here, like how much money is demanded or supplied. And we're talking about borrowing money specifically. And then the price is the interest rate. So the interest rate is simply the cost of borrowing money. And then where that meets gives us our interest rate. And it's what in reality, it's quite a bit more complicated, but understanding this helps us understand what factors affect interest rates. So as a quick example, if the supply of money is decreased, then that causes the equilibrium to shift and the interest rate to rise. So a lot of our conversation is going to be kind of framed around this supply and demand concept. And here's a simpler way to look at it. And this is talking about rates. So if supply goes up, rates go down. Supply goes down, rates go up. So there's an inverse relationship there. And then demand is the opposite relationship. When demand goes up, rates go up. When demand goes down, rates go down. So we're just going to use the arrows, pretty simple, to explain what factors affect interest rates as far as supply and demand. Okay, now we need to have a quick discussion about the federal funds rate. So this is the rate that commercial banks lend and borrow money to each other overnight. So we have banks and they are required by law to keep a certain amount in reserves according to how much their clients have. And so at the end of each day, after all their transactions take place, they have a certain amount in reserve, and sometimes they have too much, sometimes they don't have enough. So they actually lend money to each other to meet those reserve requirements. And that happens every day. So this Fed fund rates that we hear all the time. I mean, in the news, you hear the Fed raised rates. That's what that is referring to as this Fed funds rate. Excuse me, the Fed funds rate, not mortgage rates, not credit card rates. That's what it's talking about. So that rate is determined by a committee. It meets 8 times a year, and they go over monetary policy, and their goals are to keep inflation in check and promote economic growth. So that's what they're doing when they meet and setting rates. That's what you hear about in the news.
So I'm going to interject here, Tyson, because everyone's hearing right now the Feds are going to raise rates in March. So we need to pay close attention to kind of the next couple of slides that Tyson's talking about, because yes, the Feds are going to start raising rates, and the first time will probably be in March, but that's not a direct correlation necessarily to mortgage rates. So cool. Thanks, Tyson.
Right. Yeah, so they've already, so 2022 plans, they've already announced. So back in fall, winter, they said 2022, we're going to start hiking rates, because it basically dropped to 0. So that was in an effort to stimulate the economy, to make borrowing easier for people. And it does have an effect on all interest rates, from auto loans to mortgages. It's not a direct correlation like Bliss was saying, but it does have an effect.
Yeah.
So yeah, Tuesday, actually, the Fed announced that they're going to signal a rate hike in March. So that's pretty sure that that's going to happen, and then several more times throughout 2022.
And I actually I want to say something about this. So they did that on Tuesday. Today is Thursday. Yesterday, the Fed chairman came out with a statement basically stating we're doing that. Yesterday, rates got worse because he made a statement. And then today, the market said, we kind of overreacted to that. So we're going to calm down a little bit, and rates went back down a hair. Now, these are slight things, but you have enough slight things that go up, rates really do go up. So we went up a little bit based on a statement yesterday. Everybody said, oh, we kind of overreacted, and the market got a little bit better today. So crazy, it's crazy.
Yeah. Yeah. So even though the Fed is like meeting and setting rates, there still very much is a market that reacts to that news. It's not, mortgage rates aren't set by any overlying entity. There's a lot of moving parts. So yeah, just this slide, basically what we've already said, it does affect things. So that increases rates across the board. And then as Bliss was saying, mortgage rates react in anticipation of what the actual Fed rate does. So there's been no rate hike yet, but just the fact that they've announced it, that's what a lot of recent increases in mortgage rates have happened. And then in the future, we'll probably see continued rates as the Fed actually follows through with what they're going to say and then makes new announcements later in the year. Okay, so other plans that the Federal Reserve has, they're going to ease purchasing of mortgage-backed securities. So this can get really complicated, but to keep it simple, mortgages are sold on the market as securities. And in March of 2020, in response to COVID-19, the Federal Reserve started purchasing these mortgage-backed securities. Now, this actually increases the supply of credit, of money available to borrow, because the federal government is a low-risk buyer. So when they buy loans, everyone's comfortable that they're going to come through. I don't know if that's false confidence or not, but that's how the market works. They employed the same strategy in 2008, 2009, after the housing crisis. So again, it's an effort to stabilize the economy and keep it cheap to borrow money. I went back. I went the wrong way. Sorry. So when they ease the purchasing of mortgage-backed securities, that's going to decrease the supply of lending of that part of the market, which in turn increases interest rates. There's that inverse relationship there. Okay, now we have to talk about inflation. So interest rates increase during inflationary periods because if you borrow money now and then inflation happens, you can actually pay back the money you borrowed with money that's less valuable in the future because of inflation. So inflation increases the demand for credit, which increases interest rates. So there's been a lot of talk about inflation. I'm sure you've heard it in the news. Rates have gone up a lot since the low point last year. And a lot of that was fear over inflation, but now we're actually seeing it. So, oh, I went backwards again. Okay, so the demand, as I said, the demand for credit goes up during inflationary period, which increases interest rates. So far it's all been bad news, right? Rates are going up. So here's a summary of what we've talked about so far. So the Fed rate hikes increases mortgage rates. The Fed not buying mortgage-backed securities at the same rate, that will increase mortgage rates. Inflation increases mortgage rates. So we should see interest rates go through the roof, right? Should just get crazy. But in reality, the actions that the Fed is taking with rate hikes and not buying mortgage-backed securities is an effort to decrease inflation. So the net effect of what we think will happen this year is, although we're seeing mortgage rates climb now and probably will continue to climb for a while, if the Fed is successful in decreasing inflation, overall, we should see a net decrease in interest rates again. So that's the good news. So all these things that are happening look doom and gloom, but if we can get inflation under control, then mortgage rates should actually drop later this year. Not as low as the floor we saw during the height of COVID and all that, but we should see an improvement.
Well, and actually, you know, one article that I recently read that says they're already predicting inflation to be held in check with these measures really quickly. And so I love this next stuff that Tyson's going to go over.
Okay, so here's a quick history of where we've been and where we're going. So December 2020, we were down at 2.5%. This was just about the bottom. And I'm talking mortgage rates now. And this is typical 30-year fixed, of course, credit and everything, but this is kind of averages. All right, by the first quarter of 2021, we've gone up to 3%. We dropped back a little bit in July of last year. By the end of the year, we were back around 3%. This is where we are now. So well into the mid threes.
Now, I will make a note there. Obviously, there are lower rates than that. If there are some loan programs, FHA, USD, that are lower,
Yeah.
Great credit, big down payment. But we're just kind of giving you just some averages right now.
For sure. Yeah. I mean, an interest rate is very specific to a loan scenario. But yeah, this is just kind of the ballpark. All right. So by the summer, we could be well into the fours. So Barry Habib is somebody that I respect a lot, and he's one of those guys that follows this, that it's his job. He didn't think we'll get quite above 4. I'm not quite as optimistic, but this is kind of worst case scenario of what a lot of industry experts think and what I think. So yeah, a little bit above 4 by the summer, and then by the end of the year, it could drop a full % back to the low 3s. So that just shows how much of an impact inflation has on our economy. And again, this is a projection. No one has a crystal ball, but based on the information and the economic indicators we have now, this is what we think interest rates will do throughout the year. All right, let's talk about what could change this projection. All right, so if the Fed actions don't work and inflation gets out of control, that will cause rates to increase. If there's a large stock market correction, a lot of people still think that that's coming. And when the stock market drops, demand to borrow money drops as people save more and invest less. So that could cause rates to drop even more. And then if China has a currency crisis that affects the global economy, can also cause rates to drop. And then if COVID-19 concerns continue, that's what has kept rates low over the past couple of years, amongst other things, but that could also cause rates to stay low. So there's a lot that could happen. And of course, if multiple of these things happen, they could counteract each other. And anyway, that's just some things to look out for as the year goes on. Okay, so now we're going to shift a little bit to the housing market. I put this up here. The Kempsey Gardner Policy Institute at the U of U does some really good work. And every year they publish a state of housing report. And it is 20 pages long and is a gold mine of information if you're into that. But I'm going to kind of go through some of the highlights from that report real quick. All right, so this graph there's a lot of numbers shoved in here, but what we need to pay attention to is the red bars are the increase in households year over year. So that's like new families being created that need housing, either from the population growing into the demographic where they're now home buyers, getting married, having kids, or people moving into the state. So you can see from 2010 to 2017, there were more households created than housing units built. And then finally in 2018, that started reversing. We started trying to catch up, but unfortunately, what that did is it caused a huge shortage for where we're at now. So right now we're 44,000 housing units short. Now that doesn't mean that there's 44,000 families homeless. That just means rental vacancy rates are the lowest they've ever been. There's young families living with their parents or grandparents or other family members. There's people living in basement apartments. So there's a huge demand for housing. So it creates a shortage because we have more people that want housing than there are housing units available. And so either way you look at it, if you see it as a supply shortage, that still increases home prices, or a demand. I mean, it's kind of a double whammy because there's a shortage, supply is down, demand is up. So that's why we've seen double-digit appreciation over the past few years. Okay. All right, this map is interesting. This is just a national view. So you can see Utah and Idaho right there in the brightest red. This is looking at house appreciation from Q2 of 2020 to Q2 of 2021, 28% over a year. And as real estate agents, you guys have seen that and have experienced that. On a national level this year, a lot of people are saying, a lot of experts are saying high double digits, 7%, 8%. Utah is going to be more than 10% still this year, which is better, but still unhealthy. 4 to 5% is where we should be year over year for housing appreciation. That's a healthy level of real estate appreciation. Okay, so now that we've talked about what rates are going to do, what the housing market as far as home prices are doing, this is a quick case study on how that affects actual buyers, how their purchasing power is affected. So this is July of last year, low interest rates, looking at a $500,000 house. So this is a conventional loan, 5% down, good credit, estimating taxes and insurance. So this is a total housing expense. Okay, here we are now. If same price but higher interest rate. So it does affect, of course, rates are going to affect your payment, about a $200 difference a month. Okay, if we get into this summer and rates go up to that 4.25 that I talked about, kind of a worst case scenario, almost another $200 increase in your monthly payment. But it's not just interest rates, right? The housing market's going to continue to appreciate because we have a shortage. So if we're up to 535 at that worst case interest rate, now we're almost to $3,000 for a house payment. Okay, but again, not all bad news. If it stays at 535 and we drop all the way down to 3.25, then we're not much different than where we are now. Okay, even though housing prices have gone up, interest rates have dropped, and we're still not in too bad of a spot. But then, of course, rates are going to continue to go up, or sorry, not rates, house prices, and now we're back in the 27.
Well, isn't that so interesting that 500,000 at 4.25 is the exact same payment as 550,000 at 3.25? So amazing.
Yeah. So what I hope to illustrate here is that it's not all doom and gloom, right? It's a changing market, and understanding it helps you gain confidence that yeah, things are more expensive than they were a year ago, but they're only, it's not going to get better. We're not going to see a crash, and we're actually going to talk about that here in a second. So anyway, yeah, that was kind of the technical side of it. Hopefully some of that was helpful. And yeah, Bliss, back to you to talk through some of these questions.
I feel like we're on a newscast. Bliss, back to you. So here's the thing. I'm going to tell you a little story about me. So I've been doing this forever, and every so often I will say to my husband or to someone I work with, I'm never getting another loan again. Life is over. It's, for whatever reason. And you have to understand, I've been doing this for 30 years. So there's been lots of times where, right, it does this. And my husband just looks at me and says, stop. You say that every time. You're a top producer. Why would you even say that? I say, because I get this negative feeling that happens. And I think that's actually really common, right? Whether you're in real estate or you're doing mortgages, you hear all this negative news. And a lot of what Tyson said sounded negative, right? And so your clients are hearing that in the news, your buyers and your sellers, and you're like, oh my goodness, I might, as a realtor, I might never sell another house again. Here's the fact. The fact is there are going to be a whole bunch of homes bought and sold in the state of Utah every year for many, 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 many years to come. And so why not you being the one to sell X number in 2022, 2023? Same thing for me. So first of all, I just want to let you know it's important to work on your mindset, because there is a lot of opportunity out there, and we are our worst own enemies. And I'm saying that from a place where I am my worst own enemy, because I do that too, right? And so this is really going to give you hopefully some ideas on how to talk to your clients. I would love for you to unmute yourself if you have an idea on one of these questions, or maybe you want to relay a story of something you said to one of your clients that was an aha moment where they're like, oh yeah, right? Because I think we can learn a lot from each other. So please feel free to chime in at all on this. All right, so Tyson, let's go to the first one. Okay, everybody, raise your hands, right? We have all gotten this question, from grandma down to, everybody is asking that question. And a lot of it stems from fear, because a lot of us lived through, even the kids that, were teenagers in 2008, 2009, they saw what their parents went through when the housing market crashed. And so there is a lot of fear coming from this question. And if you think of, I can't remember the term, it's a hierarchy of something, but one of our basic needs is to feel safe and secure. And that really is important when it comes to housing, right? And so again, Tyson said we have 44,000 units that were short. It doesn't mean people are homeless, but I have a family on my street, and they have two of their grown children and their spouses living with them right now until they kind of, figure out what they're going to do. And that may be longer term than they realize. And so having fear or a sense of insecurity is where this question stems from. And so, is the housing market going to crash? Let me tell you exactly how I answer that. Oh, thank you, Tyson. Maslow's hierarchy of needs. For me, it's, security, chocolate, my bicycle, and then the rest. Okay, so is the housing going to crash? You know what? Let me tell you my opinion for what it's worth. Sometimes I make a joke and say it's worth what you paid for it, which is nothing. But no, it's not going to crash. And here's why. We have a huge shortage of housing for people that are now forming their own households or moving here for jobs. We have a 10-year projected shortage of housing. So what that means is that house prices are going to keep increasing. Yes, I hope they go a little bit healthier and not as fast as they have been. But if you don't buy a house this year, then it will be more expensive. And so there's a lot of really good reasons to buy a house now. So that's kind of my basic answer for people when they ask that question. I talk about supply and demand. I've talked about, how we have this two demographics. We have the one of, my 4 children are ages 22 to 34, and they all are now in their own home. But my demographic has children now needing housing and wanting to buy a home. And then the demographic of the people that are moving here for jobs. And I just realized there's a third demographic. I've actually done a lot of transactions for people that are retiring in Utah. surprisingly, I had to go back and look at my statistics from 2021, from Arizona, from South Carolina, from California, that basically maybe they have family here or kids here, or they grew up here. They love the mountains, they love the outdoors. And so they're retiring from where they spent their working career and they're moving here. My cousin's one, right? They were in the military for 20 years and they've been at a couple different universities since they retired from the military. They're in New Mexico right now, and they're buying a 55 plus retirement home down in South Provo. And so perfect example of that. So I want to open this up for just a quick minute. Does anybody have any response to this question that might be slightly different from mine? Don't be shy. You can do this. Anybody want to share anything?
I'll jump in. This is Ryan Sedgwick with Equity.
Awesome, thanks. Yeah, I appreciate that you gave us your name, Ryan.
You're welcome. So I work with, I'm working with one client in particular, and she has been kind of the hot, cold client, right? We get really excited, move forward, go through some showings. She actually was an individual who I think is in a bit of a unique situation in that she had no credit when we started working together. So we had to create that credit profile for her to be able to qualify for a loan, which took us almost a year to get everything in place with COVID and everything else that was happening. But super solid from an income perspective, should save, oh gosh, she's probably got $150,000 in savings ready to put down on this new home. And about 2 weeks ago, she reached out and said, oh, I've been advised that I should wait a couple months for home prices to drop. And I've had several conversations with her trying to help her understand. And so maybe my contribution here is more of a question. I mean, I'm taking meticulous notes. I think this is great information. And I've shared some of these things with her, you know, in terms of increasing rates and the supply still remaining low. I didn't have any idea that the number was 44,000. So I'll go and check out Kim Gardner's state of housing report there. But I'd love to get some insight to help her understand that waiting a couple of months won't help her from a home price perspective or from an interest rate perspective, but it is a very real issue that many of us are facing.
I think one of the pieces that we didn't discuss is employment. And so if Utah were to somehow lose jobs, that is the only thing that I foresee personally, the only thing that could slow housing down. And Utah has one of the most favorable, hottest job markets in the country. And so, and we have people moving here because they can work from anywhere and they want to live by the mountains or by family. And so for all of those reasons, I will stand up on my soapbox in the town square and just say housing is not going to crash. It may slow down, but it will still appreciate. It will not crash. It will not go negative. And in the foreseeable future, and when I say foreseeable future, I mean 10 years. So you almost have to get passionate about it, not in their face, not aggressive or anything like that, but it's like, hey, you know, I have researched a lot of different things, and there's absolutely nothing in the market of Utah, from jobs to housing formations to our economy, nothing that indicates that housing could crash. And so, yeah, thanks for bringing that up, because a lot of people have that fear. So anybody else have anything to share on this one before we move to the next question?
Crystal Worthen here with Presidio Real Estate. I have a lot of clients say, well, what happened after 2008 to prevent it from happening now? Because it's trending the same way.
Sure, it is. And I think that's where the fear is coming from. I am so glad you brought that up. So the 2005 to 2007 or 2008 increase in housing was not sustainable. There was a tremendous amount of fraud in the Utah real estate, straw buyers, incorrect, false, illegal appraisals that was happening in that growth spurt. And so it wasn't sustainable by jobs. It wasn't sustainable by projected incomes. And so really our market is a 180 difference of the market that caused the increase in 2005 to 2008. And that's why we won't have a crash similar to that, because we don't have what led up to that. House prices were going up for no reasons other than appraisals were giving us values that weren't really there. So super good question on that, Crystal. Thank you.
Yeah, and you can go back to supply and demand. There was oversupply where there wasn't demand. And we're not seeing that at all now. The demand is there.
Yeah, cool.
And that's not even all the illegal stuff. I mean, the lending landscape was totally
Insane.
different. I mean, Bliss could talk about that. I wasn't in the industry then. But
I could give you a loan for no reason other than you asked me. Yeah. Yep. Cool. All right, let's go on to the other one, next one, so we make sure we have time for everything. So this is a lot of what Tyson talked about. So in some simplistic things, because this is what people are asking me all the time, what are interest rates going to do? So this is how I answer it. You know, I know you've probably heard in the media that the feds are going to raise interest rates. Well, we actually have already seen mortgage rates go up in anticipation of that happening. So the crazy thing is, and I've been doing this 30 years, the crazy thing is a lot of times when the feds actually do raise rates, that is has a stabilizing effect on the market. And I've seen mortgage rates dip down a little bit once the feds do what they say they're going to do. It isn't guaranteed to happen this time in March, but they're expecting 2 to 4 increases this year in the Fed fund rate. So mortgages are already gearing up for that to happen. And those Fed increases are trying to tame inflation. And if it works, we actually may see rates go down by the end of the year. So I don't know how many sentences that was, but that was maybe what, 30, 45 seconds. And I think it was in a way that pretty much everyone could grasp it. I'm not saying rates are going to drop anytime soon. They could still go up a little bit, but my hope is that by the end of the year, they come down. But right now, I wouldn't wait to buy a house, because this $500,000 house may be $550,000 in December. And even if rates drop that back down, you're better off buying right now, and at least starting your search, because your search may take a long time and you just can't give up. And actually, I want to kind of come back around to that conversation as well, how to help your clients not get discouraged. That was one of the slides I think I forgot to tell you to put in there, Tyson, so don't forget. So let's open this one up real quick. Does anyone ever have any other thoughts or comments you've made to your clients that we could all benefit from hearing about this? What are interest rates going to do? Hopefully that means I went over it really well for everybody. Okay,
so
let's go. Oh,
well, there's another part to this slide that I've actually used with my clients that are worried about rates, and I think it's awesome. So I put the technical answer, right? That we everything that we talked
great.
about, which is great if you want to answer their question. But honestly, a more practical answer is it doesn't matter what rates are going to do. There's no point in trying to time the market and get the lowest interest rate, because we never really know. So as long as your mortgage payment fits in your budget and you're getting housing to fill your needs, it doesn't matter, because nobody pays a mortgage for 30 years. You're either refinancing, you're selling the house, at the end of the day, if you can afford the payment, that's what you need to focus on, and not worrying about trying to time the market.
I'm so glad you did that, because honestly, give them a technical answer in a couple of sentences, fairly simple. But then I want you to say, that's kind of the technical side of it, but here's the truth. It really doesn't matter. And this is why. You cannot time the market. Do you need a house? Can you afford the payment? Maybe it's going to be a little bit smaller house than what you wanted. I'm going to share with you, so I don't know if you guys know Kitty Cheney or not. She would have been on this call, but she's on a cruise. She and I had some clients that were looking up to 400,000 single family in Salt Lake City. So my first thought is, wow, this one's not going anywhere. But I did everything I could do to get them credit approved so that they were great. Oh, and the FHA under 400,000 in Salt Lake City, single family. How many of you would have just given up at that point? Don't raise your hands. But inside, I kind of gave up on them because to me that seemed impossible. They ended up getting 2 offers accepted on an offer on 2 different houses. She didn't do anything. I know there's some circumstances where you're not supposed to do that, but they submitted the offers at the same time. And I'm like, oh my goodness, please tell me how you did this. And Kitty said to me, she's like, you know what, when I start working with clients in these really difficult price ranges, I am so straightforward with them. And I say, you have to be willing to give up something you really want to get other things you want, and look at a house that maybe there's a reason someone else isn't looking at it. So they got an accepted offer on a $400,000 house that has basically a 4 or 6 foot backyard, because there's a cottage and they share a driveway. The original lot was split for this cottage to be built. It's its own property. And it hit every other box on their list, and they got an accepted offer. Now that situation might not be perfect for someone else, but they didn't want a townhome. So they were willing to do that. And I just thought that was brilliant of her to say to them, be willing to give up something on your list, right? Or be willing to look at something that maybe someone else isn't willing to look at. Yeah, to me, it was a miracle. It really was. And this couple is so happy. All right, let's go ahead and move on to the next question. I have a lot of equity, but what if I sell and I can't find a house? This is the one I actually want you guys to chime in on this one, because you're the ones having this conversation with people. And so the first thing I ask people when I get these questions is, on a scale of 1 to 10, how happy are you in the home you're in right now? Why do you think you want to move? Well, a lot of time I'm in a townhome. This is not my forever home. I don't want someone next to me. I don't want an HOA. That's a pretty critical thing, okay? Then also, how willing are you to give up some of your dream list to be able to find that single family home? Are you willing to look in a little bit further out location? Are you willing to look at 3-bedroom instead of 5-bedroom? Are you willing to look for something with an unfinished basement? Use some of your equity to finish it. So there's a lot of ways you can bring that conversation back around, so they can see possibilities. I've also had, I've seen a couple of contracts where the contract on the sale of their home is subject to them finding another home and gives them 60 days. So now I actually want you guys to chime in on that idea and any other ideas you might have to answer that question. So who wants to share? Sue Ann, are you still on the call? Because you have our little friend Andrew down in Nephi. And I know his struggle was, you know, I'm going to sell my house and
Yes.
I might not. I would like to hear how you had that conversation with him.
Okay, so, and I've had to do this, well, I'll back up. So one of the hardest things is to take someone who owns a house and obviously transition them into a new house. So there's always the plan A that's going to go really smooth, right? Which, yeah, good luck. I always ask about the plan B, in that if we sell their house and we don't find a house immediately that suits them, because you don't want your clients just buying anything. They've got to actually buy the right house.
Yeah.
Do they have some place to live in the interim? And the plan C, and this is with the Alvarados, they have 4 little kids that are literally swinging from chandeliers, and a dog. And so to put them, they didn't have family to live with. So to put them in interim housing, like a rental, just wasn't an option. So for them, we had to, and we lost our first buyer, and their house is very interesting, and it's in Nephi. So it was really, and we sold it for like $350. Like, oh my gosh, just saying. So we lost our first buyer, but in the contract, both contracts, we're under contract now, but we basically said that you'll give us, you know, so much time to find a house. And if we can't find a house, then the seller has the option of voiding the contract and not selling. And while we were looking during that first experience, the buyer was also looking, found another house they liked, and they canceled on us.
Mhm. So there's a risk.
Yes. And I told them all about the risks. I said, this is going to be a roller coaster, emotional and otherwise.
Mhm.
So we lost that buyer. And I said, don't worry. We talked about this. You just get back on the market, find another buyer. And with this one, the Alvarados were willing to accept the imminent deadline and go into it, try and find a rental if they couldn't find a house. So that upped the ante really, and the buyers were happy with that. So we're in the situation right now where the buyer's given us time to look for a house. We're going to close, I can't remember when, and then I think we've got another, I don't know, I want to say 30 days.
Well, and I think that he's now realized, and this is an education process
Exactly.
for all of these buyers, that he's got to be more aggressive on his offers, and
Exactly.
he's got to be, you know, he's looking in some other areas, you know, and so sometimes your buyers especially have to go through a couple of hard things to realize where they really need to be and what they're willing to accept. So Sue-Ann, thank you so much for sharing that.
Absolutely.
Anybody else want to share something? I have a lot of equity, but what if I sell and can't find a house?
So I'm obviously not a real estate agent, but one thing that I've just seen in my experience helping buyers that are also selling is we're still in a seller's market, right? Sellers have a lot of power, and I've seen a lot of leasebacks to where, you know, after we close, I'll lease the house back from you for 30 days. And that,
And you
know,
can do up
it's-
to 60 days and be in compliance with the deed of trust and owner occupancy rules. So just,
Right.
and I say 59 just to be safe. So
Right.
just know you can do up to 59. And yeah, you're right. The seller's in the driver's seat, and a lot of buyers are open to that. If you'll let me buy your house, freak, I'll give you tacos every week for a year, right? So cool.
So yeah, of
Anybody-
course, every scenario is different, but I've seen that a lot where they lease back their own house for a while
Yeah.
after closing. So it gives them some more time.
Nice. Anybody else want to share anything on this? Hopefully you all have fantastic buyers and sellers that listen to your advice, because that's obviously what you're there for them, is to be that expert and that resource. Okay, cool. Well, if no other comments, let's move on. I think this is our last one. What should my biggest concern be? You know, it's why not everybody goes and puts a sign in their front yard to sell their house, right? They're looking to you and to me to help them really understand and feel safe about that decision that they're making. And so this is Tyson's, oh, wow, dang. Average rental rate.
We're not talking about food. Sorry, that should say rate. The rate increase.
So this is the increase. Oh my goodness, right? So here's the thing that I like to point out to people. If you don't buy now, your rent is going to keep going up. If you buy now, your principal and interest is locked in. Yeah, taxes and insurance can fluctuate, but your principal and interest is locked in, and taxes and insurance are not going to go up at the same rate that rent prices are going to go up. We are becoming very similar to California, where people are paying, you know, $3,000-$4,000 a month for a very modest rental. And so, in fact, we just bought our daughter a piece of crap house in Salt Lake City that she and my husband renovated, because she and a friend were looking to rent, and rooms were $600 to $700 plus utilities. I'm like, all right, sweetheart, let's do the math, right? We did the math, easy breezy for us to do that with her. And now she has roommates, and she learned how to put floor coverings in. So yeah, I think that's one of the things that they understand if they're a first-time home buyer, right? one of their biggest concerns should be is if they don't do something, where will they be in 1, 3, 5 years? House prices are going to go up, interest rates could go up, rent's going to go up. So you don't want to be a renter forever. Your goal at some point, if you're talking to me right now, your goal obviously is to own a home. And whether that's in the next 3 months or in the next 3 years, let's be realistic about that. What's going to happen to your income? What are your opportunities, right? And so that's a lot of the conversations I have with people. And there are people that, you know, I don't want to push everyone into buying a house because I make money when they buy a house. That's not my goal. There are people that I have initial consultations with that there is really good reasons for them not to buy a house right now. So we discussed what to do so that when they are in a good place to do that, they're ready to go. Not everybody takes my advice, but you know, we're in this for the long haul. You guys are in this for the long haul. You're going to be selling real estate in 5 years. You're going to be selling it, you know, hopefully for a very long time. And so these people that you talk to right now, even if they really, their concerns are very valid that they shouldn't buy right now, that's a future transaction for you. That's more valuable than just about anything. You treat them right, help them to really comprehend what's happening and where they could be. I've actually had those people refer other people to me for mortgages, even when I couldn't help them right now. And so understanding all of this and how to have those conversations, I think is super critical. Any of your guys' thoughts? Have you had people ask this and how did you answer that? Who wants to share? I know some of you guys get this question. Who's going to be brave enough to share with us? I could call out names. I know y'all. But I wouldn't want someone to do that to me. So I won't do it to you. But you guys get this, right? Even if they don't verbally ask the question this way, honestly, they're thinking it. What should I be worried about? Right? Everybody has worries. A lot of times your worries, sadly, are things you shouldn't be worrying about. So help people understand, really, this is what you should be worried about. What are you looking at in the future? What are you paying in rent right now? And what could your landlord possibly do to that rent? Or the people that are current homeowners. Is this where you see yourself for a long time? Right? If so, awesome. Maybe you want to remodel a little bit and stay here. Maybe that works for you instead of selling. Be a consultant to people. But if it's a situation, you know, of my commute is an hour, I can't keep doing that, right? Or I can work from home. We're hearing a lot of that right now. I can work from home and I don't love where I live. Okay, what does that look like? Let's take a look at it. So, any thoughts, everyone? All right. Well, I think that was our last question, right, Tyson?
Yes.
Okay, cool. I just want to wrap this up that Tyson and I are a resource for you guys. So if you want to talk more in depth about any of the stuff that we've covered today, feel free to reach out. If you want to have us come into your office and do some more training, if you want us to have a conversation with your client, like I said, even if they aren't planning on buying for a year for whatever reason, we love to have those conversations. We love to create relationships now so that we help people feel confident and know what they should do to get ready to buy a house. So we're super happy with that. And I'm going to just check chat right here. Ryan asked if we could share the source of the data for the rental increase year over year. So Tyson, where did you find that?
I just put it in the chat, but that's from the Kim Gardner
Oh, you saw that. Okay.
report as well.
Yep. And Carla, yeah, you can grab these slides as well. So I think we're good on all of that. And thanks everybody for being here. We really, really appreciate it. Y'all are just a great group of agents, and your clients are super lucky to have you because your primary interest is what's best for them. And I know that because you wanted to listen to all this to be able to share that information. So thanks for being here and let us know how we can help you. All right, I'm going to end recording. And Tyson, you're the host, so you actually get to do